So question one, what can we expect from cryptocurrencies by the end of this year? Could a rise in Bitcoin's prices, like the one that happens in 2017, be repeated? Okay, so my take on that is that we could see a really strong melt-up phase coming into the end of 2021. I think if we look at the signals from on-chain analytics, we can see signs of accumulation in Bitcoin. We can see that after the dip from 60,000 back to 30,000, there's been very strong buying in Bitcoin, bringing it all the way back up to around about 50,000 as I record this. That was a super strong rebound, and that shows there was a lot of pent-up demand waiting to come into the Bitcoin space. Now, there's a few fundamental drivers as well. First of all, you have the fact that El Salvador is imminently about to make Bitcoin legal tender, the first country in the world to do so. You have a lot of institutional interest around the world coming into Bitcoin. Companies like Fidelity, who are a huge money manager in the US, are a big backer of Bitcoin. You have corporations like Square Financial, who are pledging to build on the Bitcoin network. Jack Dorsey, who's the owner of Square, is a really big Bitcoin proponent, and he also owns Twitter. So you're starting to see corporate innovation on Bitcoin. You're starting to see big funds like Fidelity add Bitcoin exposure. I'm fairly confident by the end of this year, we'll see an exchange-traded fund, an ETF launched in the US, and that could be a seminal moment for institutional adoption of Bitcoin. So I think what we saw with the rise to 60,000, which is a test run for what could be a huge bull market in Bitcoin and in cryptocurrencies through to the end of 2021, bigger perhaps than 2017. Okay, question two. If this happens, how much could a Bitcoin be worth? What could happen to the rest of the cryptocurrency market? So my prediction for the Bitcoin price in this cycle, so we have 4-year cycles in Bitcoin generally, and that corresponds with the halving schedule, which is when the supply of newly mined Bitcoin halves, and they're usually about 4 years each cycle. I think in this cycle, $100,000 per Bitcoin is very achievable, and I think we'll get that. We might go a little bit past that, but I think we'll get to 100,000 this cycle. I think in the next 4-year cycle, so by about 2026, 2025, we'll see one Bitcoin be worth at least $1 million. So you can see the even just on Bitcoin, to make 20 times your money in 4 years is an unbelievable return. In cryptocurrency, that can seem sometimes like a mediocre return, but it's actually amazing. And my prediction would be, if Bitcoin keeps on growing, then the maths basically suggest that that's where it's heading to, because you have more demand for Bitcoin and you always have less supply every cycle. And I talked about this in a recent essay I released, which said you're going to have even less supply of Bitcoin available in the market, because Bitcoin miners these days don't even need to sell their Bitcoin. They can lock up their Bitcoin as collateral and use that to borrow to pay their electricity bills. So you've got this selling pressure from Bitcoin miners, even though that's becoming less and less anyway. That could be a lot less than people even imagine, and that could result in a really big supply squeeze in Bitcoin. And I think that's why we hit $1 million per Bitcoin in the next 4 years. And I think 100,000 per Bitcoin is very achievable in the next 6 to 12 months. So question 3 is, what are the differences between what happened to the market in 2017 and what is happening this year? So I've been in Bitcoin and cryptocurrencies since 2013, 2014. And the big difference in 2017 was that Bitcoin and crypto came on everyone's radar for the first time, really. There'd been cycles in Bitcoin in 2013, 14, but it wasn't really on people's radar. In 2017, the rise in crypto prices was so great that institutions, people like JP Morgan, and things like that did start to notice it, but they were still very wary of it. They still didn't trust it. They still thought Bitcoin was a scam, cryptocurrencies were a scam. This time in 2021, they no longer think that. They realize that there is technology behind this that is going to be just as important to the world as the internet turned out to be. And so now, despite what they may say publicly, they're scrambling to get involved. Through my contacts with people I know in the industry, we've reached that tipping point where they realize that a cryptocurrency-led future is now inevitable. And the trick for them is to work out how they can position themselves to profit in some way or play some role in what is going to be a blockchain-led future with elements of decentralization, new business models around decentralization, easy access to finance, decentralized finance. And so they're trying to work out how to position themselves. So their public position might still be skepticism, but behind the scenes, institutions are trying to position themselves, and they are starting to buy into assets like Bitcoin and Ethereum and maybe a few others like Solana and a few other ones. And I think that's the big difference between 2017 and 2021 is that we've moved from they think it's a scam phase on the institutional level to realizing that this is real and it is happening. I think from the general public perception, I think it goes through the same thing every cycle. So in every boom and bust period, you get a bunch of new people coming into crypto, and inevitably some, get sucked into scam projects and bad things about crypto, and they tend to fall away. But the people that can see through the bad part of crypto and realize what's good about it and persist with it through the cycle, they're the people that stay with it long enough to profit from it. And that's the trick for people like me and you right now. So question 4 is, could Bitcoin replace gold as a store of value if institutional adoption continues? What would happen to the market if this happens in the long term? Look, the short answer to this is yes. Right now, Bitcoin is about 11 times smaller in terms of value, market cap, than the gold market. But in my opinion, the gold market is easily the first hurdle to fall for Bitcoin. So the fact is that Bitcoin has many advantages over gold as a decentralized asset in the digital age. That's the key thing. Gold was a fantastic store of decentralized value 5,000 years ago, even 100 years ago. But in the age of the digital world, gold held in vaults that can't be moved easily, they can't be divided up easily, which can't be held easily and done anything online with, is not very useful as a currency or as a transactional unit. Whereas Bitcoin has all those advantages of gold. It's self-custodied, you can hold it yourself, but you can spend it. You can divide it into many small pieces to spend. You can store it a lot easier. So Bitcoin is like digital gold, but it's tailor-made for the digital age as an asset even. The important thing about Bitcoin that gold doesn't have though, is that Bitcoin is also a technology network. You have companies like Stacks, like the Lightning Network companies, there's various companies like Rootstock, and many others. Square are starting to do this. They're building on the Bitcoin blockchain. So they're building products or decentralized apps, dApps as they're known. They're building products that people can use to tap into a world of decentralized money and decentralized finance. And this is being built on the Bitcoin blockchain. So this is the thing that Bitcoin has that gold has never had. Gold can only be traded on another network. It's basically part of the legacy financial system, whereas Bitcoin isn't part of the legacy financial system. It sits apart from that. It's its own network. It's its own technology as well, which really gives it that exponential growth and value potential. And that's why, for my money, Bitcoin does everything gold can do, but it does a lot more as well. And look, I'm not against gold in any way. It might play a part in the future of the world, who knows? But for my money, the risk reward scenario for Bitcoin is a lot better right now. So question 5 is, what is the best way to invest in cryptocurrencies? Right, that's a harder question to answer. And the way I would think about this is, imagine it's, say, 1997 and you just had your first shot of logging onto the internet, and you're a forward-thinking kind of person, and you can see that this is going to change the world. The internet is going to change the world. Now, you would turn out to be right, but the harder thing would be to work out who's going to be the companies to invest in to gain value from that insight. And right now, cryptocurrencies are kind of the same thing. You can know that blockchain technology, cryptocurrencies, decentralization are all going to be a huge part of the future. But how do you tap into that as an investor to make money? That's the key thing. And so my general take on that is you have to employ two strategies. You have a very small number of high conviction positions. One of them would have to be Bitcoin, and maybe a few other cryptocurrencies which you just think are pure favorites to be long lasting cryptos. And I've got a few of them that I recommend to my subscribers. But the other important part of playing this opportunity is to be nimble in your thinking. And that's when you have to have a trading strategy. You have to try and look for quality projects, but also trade in and out of them as the stories evolve. That way, you're not wedded to an idea, you're letting the reality tell you where to put your money. So if you do that right, you'll start to see projects over time that are breaking away from the cryptocurrency pack in terms of their value. And if you do this correctly, then you can stay on those projects and hopefully land on a few of the Amazons or Netflixes of the cryptocurrency revolution. But also, if you get it wrong, you can still make profits short term just on trading in and out of them as well. So I think for my money, you have to think of this in two directions. Have some high conviction plays, because I think we all like to try and think of what the future will be in 2 or 3 years and really follow those stories closely. But also be nimble with a part of your cryptocurrency portfolio and trade it. And trade in and out based on what the price dynamics and on-chain dynamics are telling you. But if one of those projects starts to surge and keep on going, then hold on to it as well. Because at one stage, we will start to see the Googles, the Amazons, the Apples of the cryptocurrency revolution just keep moving and just keep going higher and higher. At the same time, a lot of the weaker projects, the scam projects, the projects that never added any value, they'll fall and they'll never rise. So a big part is to try to make sure you don't end up on those projects that fail. Just like in the dot-com boom of the 90s, a lot of projects failed and went to zero. You want to try and avoid them, and you want to try and land on a few of those big winners. So that's my tip. And question 6 is, among all strategies, which one do you recommend and how could it help people's finances? So that's related to the point I made previously. You should hold some Bitcoin no matter what. As part of your overall portfolio, hold some Bitcoin. That's the first thing you do as a cryptocurrency investor. The rest of it, you trade your way into the most promising cryptos and you let the market tell you if you're right. And if the market tells you you're wrong, you move out of it. But if the market tells you you're right, because the price is moving forward, then you stick with that project. And you try and make money from trading that idea. Even if you're wrong, you can still make money. But at the end of the day, the big money will be made from landing on those cryptos that go all the way. And I think to do that, above all, you need to have a system that does that. And that's what I try to give my subscribers.
I hope you enjoyed that preview from New Money Investor. To get access to the full video and much more, please click on the link below.